And welcome, folks, to another wonderful Winning Wednesday. You got your boy Lee Johnson here. And unfortunately, we're not going to have the Miss Eunice joining us this afternoon. But, I know as much, well, I know half about what she knows when it comes to investing using your whole life insurance policy. But what I can speak to is the experience that we have had in using our policies for different various things that we wanted to go and use them for. So let's get started. Well, let me say first again, welcome to another wonderful Winning Wednesday. I hope that you are having a blast with everything and that your week is coming along just fine. With that being said, as I mentioned, Miss Eunice is not going to be joining us this afternoon. So, what we'll do is we'll make sure that we have this same topic on for next week. And that way, we're going to be able to discuss this topic even further. But let's have it to the audience. Are you aware that you can actually leverage the cash value to a whole life insurance policy and use that to access resources when you need it? One of the things that I most like about being able to leverage a whole life insurance policy for business is the fact that there is no approval requirement, right? As you are funding your life insurance policy, every time you fund that policy, a portion of that payment goes to the cash value component of the life insurance policy, and the other half of that goes towards the premium or the death benefit, right? You, as the policyholder, can then request a loan. The loan is going to be coming from the insurance company, right? It's not that you are tapping into your own policy. Your policy is being used as collateral for the loan, right? So, what happens if you aren't able to pay back that loan? That loan will incur interest, right? And that loan will then eat the cash value until it is exhausted, is what I understand about how this all entire thing works, right? So, one of the things that I read when I read The Infinite Bank, or the Becoming Your Own Bank, is the fact that if you are an owner for a store, you do not want to go into your store and basically take out food and merchandise without paying for it, right? The same exact analogy is available to you when it comes to a whole life insurance policy. You do not want to take out a loan and not pay it back. So you have to be a good steward of using these resources to make sure that it is in your best benefit as a whole. I hope that makes sense. If it doesn't make sense, just be sure to send me a comment and I will get back to you with further information, or Eunice would be able to actually speak to you on what's going on around there. But what we were looking for is using whole life policies to pay for marketing, equipment, and expansion. So let's have that conversation. Once you have reached out to the insurance company and they have asked you, where do you want the money to be replaced? Because remember, there is no approval process when it comes to the policy loan, right? They're just going to ask you, where do you want the money to be sent based upon the cash value that you have available against the policy, right? Once that money has been deposited into your account, it is literally up to you for what it is that you want to use that money for. You can use that money for marketing, right? One of the things that we neglected when we first started our business was funding our marketing budget properly, right? So now you can use those resources to fund your marketing properly. First thing that you have to do when it comes to marketing is make sure that you have a website, right? I'm a big member of BNI and I am doing more things and I'm about to do even more things when it comes to BNI, but you want to make sure that your marketing is there. And I would say the first piece that comes when it comes to marketing is making sure that you have a website, right? A website is going to be there to let people know who you are, what it is that you do. But I think more so than anything, your website is going to give you social proof that you are a business, right? And as you very well know, your website is not going to use the IP address. You can do an HTTP, your IP address name, in order to hit your website, but we know that that's not going to happen, right? You're going to then associate your website with a domain, right? And that domain, $10, $15 a month. I in particular like Cloudflare because I believe that they have one, great privacy, and number two, they also have some of the cheapest rates that I've seen compared to some of the other registrars that are there. But the reason why I really wanted to go on this particular tangent was because quite often I'm at my BNI event and I will see a business owner that gets up and they are using an unbranded name for their email address. And as much as I love Google or Gmail, and as much as I love Yahoo, and it starts to age you just a little bit when you're still using a Hotmail or an AOL email address at the same time, it ages you just a little bit. But the first thing that the other loan providers are going to be looking at is whether or not if you are using an unbranded or a branded domain name for your email address. And it's a very simple thing to do, especially when you're on Cloudflare or similars, where you could actually even have it does a relay to take your name at your domain.com and it will relay that over into your Gmail account. So simple to do. I believe it actually makes you look a little bit more credible, but that is one way that you will be able to use your policy loan in order to increase your marketing by making sure that you have a strong presence with your website, that you are using a branded domain, and that you are using branded emails in order to communicate to the world who you are and what you do. One of the things that we have also done is we have also used an info at VIPbiz.com as well as a hello and support. All of that gets relayed into the same email address, well, same email bucket, but all of those have different names based upon the reason that you're looking to contact us. So that's something else that you can do. Now, and if you have that policy loan, and if you are a landscaper who has a policy loan, you could actually utilize that policy loan to purchase a reliable vehicle. Because if you're a landscaper or you're someone that does, let's say, snow removal in the winter months, that's what a lot of the landscapers do during the winter months, is they will actually do snow removal. You are able to purchase a reliable vehicle and the equipment that is necessary for that vehicle for you to be able to do business. So that is something else that you could actually use the cash value of a policy loan to purchase. Last but not least is if you wanted to expand. And I think that this is one of the critical things that you have when it comes to a policy loan is the fact that there is no approval when it comes to a policy loan and they will wire over the funds into your bank account. Let's just give you a scenario. You have a scenario where someone is distressed, right? They're distressed, but you know their business, right? And they are saying to you, hey, I have a deal that I would give you to purchase this business or to take it off of my hands. This is how much I'm going to need. But because I need this money quickly, right, we need to move very fast. Of course, there's always going to be the legal aspects that you have to take care of to make sure that the business is transferred into your name. But if you had to go the SBA route or the traditional bank route in order to get access to a loan or a line of credit, in order to be able to make that acquisition or to expand, it's going to take 30, 45, 90 days in order for you to have access to that capital to make that investment. However, if you are a business owner and you decided that you wanted to go and expand or purchase another business, all you have to do is probably go to your website of your carrier and fill out the application for the loan. Remember, there's no approval, so it's not technically a loan application, but those funds will be wired into your account, I think within 24 to 48 hours. So even though we always talk about things that you could do from a business credit perspective, I also wanted to share things that you can do because it's the best of both worlds when you have access to capital that is ready and waiting for you, and that has a direct impact on your business as a whole. So I don't have much more than that today. We understand where everybody is on the economy. The Senate has actually voted on reopening the government, right? The Senate has voted on reopening the government. And I understand after like 50 plus days, the House of Representatives will be back in order to vote on it. And hopefully we can get, those air traffic controllers and those TSA folks back on the job and getting paid. It really sucks just to hear that someone is having to go into work and not being paid for their services. I don't believe that is right. That is just. I think that is broken as a whole. So I just wanted to share that with you as well. So things are moving there. We're coming up on the holidays, and I believe the Feds are going to meet one more time this year. And I think the market has somewhat adjusted itself that there probably won't be a reduction again this year, because oddly enough, that when they announced that they were lowering the last time, I think Powell came out and said that it wasn't a given that they would lower in the December meeting, which then had mortgage rates shoot up just a little bit, right? So we had experienced probably between October and November that the rates had come down until that news was announced, but then rates went back up. And I'm about to speak to him in just a little bit, but a friend of mine, Glendon, who is a mortgage broker, he had actually been saying for weeks on end, don't be worried about what the Fed is doing, because the bond market is where you should actually be looking when you're looking at a mortgage, because that will impact how much you're going to have to pay on a monthly basis. So I believed them all the way. And now you actually see the effect of it. It's a good headline story when the Fed lowers interest rates, but what happens in the bond market, in the 10-year treasury to be exact, around mortgages is a whole totally different story. And if you're going to be purchasing a home, that's what matters. The last thing that I wanted to talk about is, because we talk about business insights here, and since we are real estate investors, the last thing that I wanted to talk about is, I hope that you will send us emails and go into our comment section and provide your thoughts on a 50-year mortgage. Earlier in the month, it was announced that the average age for a first-time home buyer has now creeped into someone's 40s. The average age of a first-time home buyer has now creeped up to the age of 40s, right? This probably when I purchased my first house, I'm going to use me as an example. I purchased my first home when I was 24 years old. So in the last 20 years, it's gone from 24, early 20s, mid 20s after you had graduated college, and now is at 40 years of age. The question that I have is that is that still access to the American dream? Because I believe the American dream is inclusive of owning your own home. However, if you can't purchase your own home until you're 40, you're probably not going to have real equity in that home until you're in your 50s. And then in your 60s, you're possibly going to be looking to retire, but you don't want to retire if you actually have a mortgage that you're paying, much less if you have a mortgage where you are 50 years in, right? So that's the second question. And one of the things that we know is if you haven't yet purchased a home, they actually show you on page 1 or page 2 how much you're going to pay in interest, whether that's a 15-year, a 30-year. And I've heard people actually going for 40-year mortgages at the same time. But one of the things that we know is that very early on, most of your payment is going to interest rather than principal. And it's typically on a 30-year mortgage going to be around year 12.5, 12 and beyond, where you actually are balanced, right? And paying as much money to principal as you are paying to interest, right? So now if you extend that out to 50 years, most of that interest is probably going to go, most of that payment is probably going to go to interest all the way through to probably year 25 before you start to hit that balance point and start paying more to principal versus interest. So it's just something that I wanted to share with you and something that we could all think about as this conversation has been put into the ecosystem. And it's something to talk about because as a business owner, one of the things that you might want to do is always have an equity line of credit on your home for your capital needs at any point in time when you may need it. So first thing is, a home equity line of credit. The next thing is having an insurance policy. And the last but not least is going to be having access to a line of credit or loans in the name of the business. And those are going to be your capital funding sources for whatever it is that you might be doing. So just another quick conversation that we're having over here. I hope it was of value to you. I hope that you were able to learn something from us today. But before I close out here, I just wanted to let you guys know that, yes, we are still offering the business credit check-in. And with the business credit check-in, what we're doing is we will pull your Experian credit report and we will do a deep dive into what's on that report. So at that point in time, you have a firm understanding and knowledge of what it is that you need to do in order to move it forward, right? You're no longer flying blind. You actually know what is on your credit report. Make sure that everything is buttoned up. All of the data is correct before you even apply for credit, because if you go to apply for credit and your credit profile is messed up, they're going to deny you. And because it is commercial credit, they will not have to tell you why they denied you. All they would do is tell you that you have been denied. So I would say save yourself a bunch of heartburn, a bunch of imposter syndrome, a bunch of being rejected when you don't have to be, because you now know what is inside of your credit profile as a whole. So if you want to know, scan this QR code, get back to me. I'll jump on the horn with you, pull your credit report, spend 30 minutes with you, and we'll go over everything to make sure that you're buttoned up. Reach out to me, let me know. Outside of that, I want to wish you another wonderful winning Wednesday. I'm going to keep the topic to be the same for next week. And that way we have Miss Eunice, who's going to be there to really dive deep into the whole credit aspect, because she's the expert on our team around that information. So I'm wishing you another wonderful winning Wednesday. I look forward to seeing you back here next week. And after that, we're going to be gone away for the holidays. But until next time,